Hello, this is Sky Moore. This segment is on 4 ways to calculate net profits. When you hear the words net profits, you should always think, what category are we talking about? Because there's 4 different aspects of the film industry where it could be applicable, and you need to know which one are we talking about. So let's divide it up. One category is accounting, and we call that generally accepted accounting principles. This is the accounting reports that you send to your shareholders and lenders to impress them. It's a piece of paper with a bunch of numbers on it. It has a balance sheet. It has an income statement. It is not relevant for any cash payment purposes. Where do the rules come from? They come from the AICPA, the American Institute of Certified Public Accountants. They promulgate rules on generally accepted accounting principles. They require accountants to follow certain rules in preparing balance sheets. That is, there'll be a balance sheet showing the net equity of the company and the income and loss. And again, it's used to impress your shareholders and your lenders. Second category is for tax purposes. We'll talk about net profits. Totally different rules than for GAAP. And the rules are promulgated by Congress, in the case of the federal tax code, or states, and implemented by regulations. So it's government authority issues the rules. The purpose is to come up with a piece of paper, this time called a tax return. And it has a very real impact on cash flow, because whatever you show at the bottom as you owe as taxes, you have to pay to the government. And it's somewhat similar, that is, you start with the concept of coming up with your income and loss, similar to GAAP, but the rules are different and the result is different. Third category where it's relevant is any time that you owe a contractual obligation to somebody based on gross or net revenues, and we often call this a net profit participation. It can come up in a number of situations. It can come up with what you owe to talent for acting or directing or writing in a film. It can come up on licenses. Contractually, you owe payments. A licensor will be owed payments by a licensee under a distribution agreement. We call those overages, and that's all contractual. And how is that defined? Sometimes somebody will have purchased a share of revenue from a film, a profits interest, and what's owed to the guilds is also contractual. It's built into their basic agreements. The rules are completely different than GAAP, completely different than tax. The rules are completely contractual. It's made up between the parties. Whatever the contract says governs, and this is why you will often see that a studio or a film company is reporting net profits for GAAP purposes, but a loss for contractual purposes for paying net profit participants. And it doesn't mean that the film company is cheating, it means that the rules are different. And the last category where you'll hear net profits used is distributions to equity owners in the entity. So that, for example, a corporation makes dividends to its shareholders, or an LLC will make distributions to its members. And that's often referred to as net profits. Where these rules come from is, number one, how much cash does the entity have in its bank account? Because it can only distribute the amount of cash that it actually has. Second, what do the operative documents say? What does the shareholder agreement say for a corporation, or the operating agreement for an LLC? Are there mandatory distributions? Are there tax distributions? Is there some kind of preferred return? So you have to look to that. And then finally, there's an overlay of state law. State law always prohibits distributions that would make the entity insolvent. That is, to the extent that it would make your liabilities exceed your assets. That's always a limitation on your distribution of net profit. But what I want to really emphasize to you is, again, anytime you hear the word net profits, always ask, are we talking GAAP? Are we talking tax? Are we talking contract, participations, overages, share of profits by contract? Or are we talking distributions to equity? Because the rules are different, they don't match, and to have clarity, you have to know which category that you're in. Okay? This is Sky Moore tuning off on this segment. I hope you join me for the next one.